But let's talk about what's happening in the generics pharmaceutical space, and private equity bidding has been on for generic assets. They were bidding after a gap of about 3 to 4 years. So are big funds really interested in generics again? Is that a conclusion that we can draw out? Let's take this conversation across and chat with Kewal Handa. He joins in on the show right now. Kewal, hi, morning. You know, we're seeing that great PE push play out. Multiple PE firms finally showing interest in generic assets, and this is coming after a long hiatus of about 3 to 4 years. What would you say has changed for generics in India?
So in terms of regulation, I think things have stabilized now. There were a whole lot of price decreases happening over a period of time. Both in terms of asset quality, people have seen the quality of assets has been pretty good. And also we are seeing a strong growth of double digit now. So once you are back on a double digit growth in a domestic generic market, there's a lot of interest. And people are also looking at assets which has a lot of dossiers filed abroad. So you have a mix of business which is around about 40% global and 60% generic. And this mix is also quite interesting to a lot of private equity firms. We have seen a lot of deals happening in API also, which is very interesting.
Interest then, what about valuations, Kewal? Where are they placed? Are they attractive? That's why we're seeing this level of interest from PE players, or do you feel, in fact, conversely, we're actually going to see an impact on valuations of the kind of investment we're seeing in the space?
You're absolutely right. Because of the low valuation, there is a lot of interest by the PEs, and we have seen some distressed assets coming up for sale. You will see assets of Pfizer Global is for sale. You have seen Bocard assets coming for sale. But beyond that, there are assets between 200 crores to 500 crores with a very attractive valuation. It's not those crazy valuations of 15 times EBITDA or 7 or 9 times sales. We are looking at a valuation between 2 to 3 times of sales and 7 to 8 times of EBITDA, which I thought is what is attracting the private equity to get this market.
Kewal, do you actually see perhaps more interest from some of these players in large generic companies here who would actually benefit from partners for development? Do you see perhaps that happening sooner rather than later?
I think most of these private equity firms are very clear. They would like to really be sort of investors with majority, and they want a very good team to really take this forward. So we are going to see a little bit of different way the model is going to merge. Most of them may not be interested in playing a minority role, but playing a majority role and driving the organization for exponentially.
Right. Kewal, if PE players want to earn returns and make money in pharma, do you think that it's the Indian generic players, especially some of the mid-tier players, that will be a key investment area because growth over here could be multifold?
Very good point. In fact, I'm of the view that a lot of the big-size Indian companies should be looking at consolidation in different therapeutic segments or in different regional segments. And they should be also a player in consolidation. Or two mid-size generic companies should come together and consolidate. But that's not really happening in a big way. But you will see it's happening as we go along, as the valuation becomes quite attractive. And that would be the right way of the Indian generic consolidation rather than the private equity getting into the.
Okay. Where do you think PE players will be more interested, though? I mean, which segments do you think are of interest to them?
So, they had real challenges with the US-based companies because of the FDA challenges. But we now have realized that good companies can do good business in US, and these challenges of 483 will keep on coming up on and off. But on a long run, it's better to be a player in global market. So they have come back to look at assets which have facilities which are of a global standards. There is a lot of consolidation. There is a lot of look at the API because of the challenges China is going through in the pollution and closing of the API facilities. And a lot of the global players are now interested in looking at API. At one point of time, nobody was touching API. There is a lot of interest in API also coming back. There's also demand for good therapeutic dominance assets. So if I have a very strong therapy presence, then there is a lot of interest by the private equity in that therapy presence. So these are some of the areas they are looking at. They are looking at also technology-based companies with high IP and dossiers filed. So these are few things they will give us a great valuation.
Okay, fair point. And I guess within that, it's the Indian branded sales, which I guess has traditionally proven to be stable as well. But do you think, Kewal, that Indian pharma companies will again have to up the bar for the standards at various plants to be better compliant, as recently a number of observations at various plants have increased?
So it is a very relative. If you look at the observations the Indian plants have vis-a-vis the observation globally it's happening with China or even in US-based plants, it's much lower than them. So I think it's very relative. But the Indian companies have gone through this learning process and they have been doing whatever needs to be done to get it right. But in spite of that, even big companies like Sun Pharma had observations. So it's something that is evolving and continuously going, but it is very relative. Let's not be too bogged down by few observations because I normally find the press quite hyper on one of the 483 observation and so on and so forth. Let's not get too bogged down on that, but let's look at the long-term commitment of the companies to maintain the quality.
Okay. What's your view then on the pharma margins in the US? Do you think pricing in the US is only going to go up from here?
So we did had a challenge last few years where the margins really came down. There were a consolidation of the super stockists there. We are seeing some improvement in the margins, and we are also seeing that the first few players are actually deriving good margins. So overall, margins issue have been now settled in US, and you still get good margins in Europe, in Japan, and other parts of the world. So on an average, one should look not just at one country margin, but overall your global margin and how much it's better than the Indian market margins. And what's the return we are talking about on the investments on the US-based FDA plants.
Thanks so much for joining us, Kewal. All right, so that's the outlook there on the generic space and the kind of private equity interest we're seeing.